Hey everybody, so today I'm going to be talking about how to close a trade. Okay, so I've been getting a lot of this question and it's perfectly valid. I think, whenever you start doing options trading, you're going to definitely want to learn and know how to close a trade. Now, when you close a trade, you can be either closing at a profit or at a loss. Okay, so today I'm going to be really transparent and I'm going to show you my Robinhood account. I'm just going to show you, all my trades. Now, one thing to just preface is this is not my main trading account. I really just use Robinhood for, almost for fun, right? Just kind of try out different strategies and to try out different methods. So I use interactive brokers for my main account. I just use it simply because it allows me to use margin and the interest rate on that is super, super low. But Robinhood has just really a clean interface. So that's why I like using it to compare trades. And then when I actually do want to make the trade, I go on to Interactive Brokers and make the trade from there. So anyways, I'm going to show you how to close different positions. Some of them are down quite a bit, just because the market has been down, in the last month. And but fortunately, as of yesterday, or because the market is closed already, uh, you know the market has been slowly climbing up. Now, how long is that going to continue? I don't know. But anyways, without further ado, so let's take a look at some of my trades, and you're going to see a lot of random trades that may not make sense, but it was just really just a small conviction I had through reading some different companies. Let's take a look at this company called S. We're going to start with a call option. Okay, so let's say you buy a call option and you want to close it out. Okay, so this one was pretty bad, but it's okay because we still have plenty of time. I actually opened up this in September, and it just SID just went down quite a bit. If you take a look at SID right now, it just popped a little back up since yesterday, but as of the last 6 months, it's just really been down quite a bit. I opened this up in September, and it just kept going down. Okay, so the whole steel industry as a whole has been down really a lot. I do think there's going to be a turnaround soon. I don't know when, but I'm going to hold on to it. So I'm definitely not going to close this. But if I were to close this position, the way you would do it is because I had to buy a call option. Okay, you do the exact opposite of what you did to open up the position. Okay, so let's take for example, this call option, right? If I were to close it out right now, I would select sell to close. Okay, because I bought the open, and now I'm selling close. So I bought it at a cost of $200 per contract. Okay, that's pretty expensive. Now the value of it is $30 per contract. So essentially, I lost $180 or $170 per contract. So I could get $30 back right now if I sold the contract, but I'm not going to do it because I think there is going to be some kind of turnaround eventually, hopefully before my expiration date. Okay, I set my expiration date to March 18th, 2022. And the thing about options is it can move a lot pretty quickly. So I'm really not worried about that because there's still plenty of time for the stock to turn around a little more. Okay, going back into my portfolio, let's take a look at a slightly more complex trade. I'm gonna take a look at this one right here. That's down as of yesterday. OAS. Okay, so I actually had a gain in the stock, and this is a put credit spread. So just letting you take a look at how the stock has been performing. I bought this relatively recently, and it's been pretty sideways. I actually made a profit of 19%. Okay, so the way I would close the trade on the put credit spread is I sold the spread for a premium. Okay, so I collected a premium of $360. Okay, now the market value is at $290. So that means that like the value of the contract actually became cheaper. So that's great for me because like I collected more premium, and now in order to close it, I would have to buy to close. Okay, so because I sold to open, I would have to go ahead and buy to close. Okay, so when it asks you if it's a debit or credit, because you're buying it back, it would be considered a debit. Okay, so are you expecting to receive a credit or pay a debit for this option? You're essentially paying a debit because you're buying back that option. Okay, so that's a put credit spread. Let me see if there's anything else. Let's see. Okay, so I talked about call options. I talked about put credit spreads. As you can see, for the most part, most of my positions are just put credit spreads, call options, real simple. Um, yeah. So I think we're just gonna start with that. Later on, I'll show you some of my other spreads with iron condors and all that. But for now, we'll just talk about these two. And then if you have any questions, let me know in the comments below. Yeah, if you like this content, make sure you just smash that like button. Uh, Comment below if you have any questions. Subscribe. Until next time, guys. I will see you then.